Right. Good afternoon. Just going to give it a minute for everyone to get in. Right. Good afternoon. And everyone, welcome in. Bounce back about this. All right. Good afternoon, everyone. Welcome in. Very important topic today. Psychology and trading. I think this is probably the best time to talk about this, considering I just took a loss on, well, I'm still in the trade. I haven't closed out yet, but we'll see what happens. I mean, obviously we're in a pretty big drawdown right now after the previous earnings report on PayPal. So, it could bounce back. It could bounce back, but as of right now, yeah, I'm in a drawdown on this trade and it may wind up being a loss. So I'm going to talk about that today. I'm going to talk about PayPal. We're going to talk about the psychology of losses and how to move forward from losses. Yeah, Clarissa, it's unfortunate. Losses happen though. This is a part of the game. If as long as you take other trades, then you should still be green. Over the past year, I've taken 100 swings and 95 were green, right? So it happens, losses happen, but as long as you're taking every trade and you're making money on other trades, like the SPY swings I've caught 3 times in a row now, then hopefully you can bounce back from the loss. Okay. So let's just dive into this. I'm gonna go over a lot. So let's go ahead. Psychology and trading, elements of psychology. All right. So I'm gonna talk about each one of these different aspects today. Okay, so things we can control, things we can't control, risk factor for swings and day trades, moving on from losses, staying focused on the future, and of course, gratitude and thankfulness. All right, so we're going to talk about all of this. Things we can control. Now, when it comes to trading in general, when it comes to the market, there are going to be things that are in our control and there are going to be things that are out of our control. There are variables that we can manipulate. You guys can't see the screen? Can you guys see the screen? Hear me okay? Okay, okay. If you can't see the screen, try to refresh. Just maybe close out and come back in. Seems like it's working for most people. So, and trading, right? There are things that we can control. There are variables that we can manipulate, and then there are variables that we cannot manipulate. All right. So, what can we control? We can control our position sizing. We control our position sizing compared to account size. Now, I'm not going to give some general rule like, use 10% of your account for swings or use 20% of your account for swings and 10% for day trade. I'm not going to give some general rule like that because you guys are all trading different account sizes and you're all trading with different experience levels. Okay. So that's something you have to think about for yourself. Make rules for yourself, and know your emotional tolerance. All right. So, how much are you willing to lose individually? Right. If you have a $5,000 account and you've only been trading for 6 months, your risk should be tighter than me. I have a much, much larger account and I've been trading for over a decade, right? So I'm okay with risking a little bit more. If you're not, then you have to know that for yourself, know whatever your emotional tolerance is, and ask yourself before you start every day for day trades and for swings, how much am I willing to lose that it's not going to really, affect me in a negative emotionally way, right? And then for me personally, day trades, I like to trade larger size on because I know what my risk is intraday. We can control that's a variable intraday that you can control that you can't always control with swings. Swings sometimes we get in a trade and we're in the right side and there's positive news overnight and it'll do 200%. But sometimes you're in a trade and there's negative news overnight. Like maybe the CEO says something, or there's negative news in China. Like we never know. There could be chip news, there could be economic data that comes out that's bad, right? With swings, you have to go lighter size because we don't always know what our risk is. Now that's different when we're talking about like equity, right? If we're talking about equity and just buying SPY or buying Apple or buying any of these companies that we trade, then you can put higher size in equity. Equity we can manage, we can hold it for years of time. But when it's just swings, leaps, you can put a little bit more size in swings, but I still wouldn't go crazy. The most size that I trade is intraday on day trades, right? That's when I'm putting the most size on because I know what my risk is, right? I know the most I'm going to lose intraday, 5, 10, 15, maybe 20% on starter size, right? But I know I'm not going to risk that much for intraday, okay? But you have to make these rules for yourself. I'm not going to give you some general, oh, risk 10% on day trades, right? No, make rules for yourself, and your emotional tolerance. That's key, all right? So ask yourself before every trade, how much am I willing to lose if this trade doesn't work? Okay? Our stop losses with day trades, that's another thing that we can control. That's a variable that we can control. We can set levels, right? We can have mental stops and we can have hard stops, right? If it's starter size, then we can have our stops a little bit wider. If it's full size, then we want to make sure that our stops are tight, right? That's when if we ever say that we're adding, after we add, the most that we're willing to risk is 10%, okay? If we don't add, then it's just, we may risk 15 or 20%, and not more than that, okay? But stop losses with day trades, we can control unless there's like crazy news that happens while we're in the trade, right? Maybe like a Trump tweet or something like that, right? Trade frequency and quantity. That's another thing that you can control. You can control how often you trade and how much you trade, right? How many trades you take per day, how many swings or whatever you take per week or per month, and right, the number of trades, how often you trade on a daily basis, right? And the number of trades that you take, okay? So that's something that we can control. We can also control focusing on high probability setups, right? And we do this intraday and we do this for swings as well, right? If we're trading high probability setups, then our risk reward should be favorable, right? And we should be getting into positions that have a good chance of working out, 70, 80%. If you have a 70, 80% win rate, you're doing well. You're doing really well, right? So that's something that we can control is focusing on high probability setups. Another thing that we can control is ignoring outside noise, right? Whether that be data or Trump is talking about something in Iran, right? If we ignore that noise and we just focus on the charts, then that'll paint the true picture of what's happening with the price action in the market, right? So sometimes we just kind of have to ignore what's happening in the outside world and just look at the charts, look at the price action, all right? That's the true picture of where the buying and selling is happening, okay? Being aware of any data or economic events, that's something we can control. We tell you guys we actually may take a trade before the 10 o'clock data comes out, but we're always going to say like, all right, I'm in lighter size because there's data at 10 o'clock, all right? But this is another thing that we control. If we know that there's data at 9:45 or 10, we want to be either lighter size or just not take the trade at all, okay? So these are things that are in our control. Now there are also things that are out of our control. We can't control random news, right? We can't control if we're in a swing trade and the CEO says, "Oh, we're expecting a profit decline in 2026," and that happens overnight while the market's closed. We can't control that, right? Those are things that are out of our control. We also can't control random tweets, Trump tweets, or any type of Elon Musk tweeting about Tesla, right? We can't control that stuff, all right? Even if we're in a day trade and there's some crazy news, sometimes that happens, right? We can't control that. We can't control our exact stop on swings. You may have a stop intraday, right? But again, like if news comes out, you have to be willing to lose 50% of your position if the news is against your trade, right? We can't control our exact stop on swing. So that's why I always say swing with lighter size because you may lose half of that position, right? Or even more, right? If the news is really bad or really good and you're on the wrong side, you may lose even more than 50%. So size and swings lighter. This is my opinion for swings and for day trades. Okay. We also can't control what the trade will do after we enter, right? And this applies for both day trades and swings. We can control our risk on day trades. We can kind of control our risk on swings. But what we can't control is, am I going to get in this trade and it's going to go to 15%, I trim, and then I get trailed out at break even on the runners? Or am I going to get into this trade and it's going to trend all day and do 500%, right? I can't control that, right? That's just the market, right? Is the market trending that day or is it choppy, right? Did you get in a good entry or did you get in, maybe at low of day and you just got trailed out immediately, okay? So I can't control that. What I can control is taking good setups that have a lot of potential, right? I want to enter long at demand and short at supply, right? If we do that, that's our best risk reward ratio. That's when we're getting those big potential reversals on the entire day and we find the whole trend for the day, right? And we do this often on SPY, QQQ, whatever, right? We find those big moves. But we can't control if we're going to get trailed out of runners after we trim. That's something we can't control, okay? IV or theta affecting contract value. This happens sometimes too, right? We'll be in a trade and it's just not moving for 30 minutes and the contracts start fading, right? Especially if we're trading like 0 days or 1 DTE on SPY. Sometimes the IV dies out and the theta starts burning contracts. I can't control that. What I can control is my risk on the trade, right? So if it slips too much, I'll just take the loss or get out. We can always re-enter the position, but we can't control how the contract is actually going to move while we're in the trade, right? We also can't control company announcements. We can't control if the CFO comes on or the CAO or the COO or the CEO comes on and starts talking about the company while you're in a trade. You can't control that. You can't control Trump tweets. You can't control Elon Musk tweets. You can't control tweets, right? That we don't know that they're going to tweet these things. We also can't control getting trailed out on runners, right? That's out of our control. If it gets to your trail stop and you're in the green, you just have to sell, right? You don't want to hold and turn a green trade into a red trade because you let the runners, expand too far beyond your average, okay? So these are things that we cannot control. There are things in the market we can control. There are things in the market that we can't control. Okay. Risk factor for swings and day trades. Again, I kind of mentioned this before that it's variable. How long have you been trading? How consistent are you? How much cushion do you have on the year, right? If you're up 10 grand on the year, you can risk a little bit more than someone who's up 500 bucks on the year, right? The more that you have cushion, the more that you can risk, honestly, okay? Lighter size on swings due to headline risk, okay? Less than 20% of account, that's like a general rule of thumb. Remember, I said that's different, right? Like if you have a $1 million account, you don't really want to put 200 grand on one swing. But if you have maybe $100,000 account, you might be able to put 20,000. Or if you have a $10,000 account, you put $2,000 on a swing, right? But generally speaking, lighter size on swings because of that headline risk. If something happens overnight that's out of our control, then you could get cooked is the term we like to use, right? Larger size on day trades. Why? Because it's easier to control our risk. For us on live, you guys see how we trade, right? Today on SPY, I think it was like a 20% stop, but it was starters. I mean, it was a little bit wider probably than normal. Usually our stops are like in between 5 and 15% on live. So that's why we take larger size. I day trade with much larger size than I swing trade because again we can control that risk intraday much better than we can on swings. Okay, so 10 to 20% risk on starter size for day trades. That's just an average general rule of thumb is what I recommend. And then 5 to 10% risk once you're full size. So if you add or if you just go full, like if you get into a trade that you already know your stop is defined and you know it's going to be about 5 to 10%, then you can just get full size. You don't have to get starters, okay? The only time you get starters on a trade is if you don't really know your risk yet, right? Like you could have like a mental stop kind of, or you're planning to add, right? Like let's say, you wanted to take a bounce on Tesla at 710 and you have a zone between 710 and 708, right? Like if you're planning to buy at 710 and then add at 708, then that's another reason why you could get starter size. But really, the only time that you should be going full size is when you know what your risk is, right? And your risk should be tight once you're full size. 5 to 10% is general rule of thumb. Once you're full size, that should be your risk for intraday. Okay. Always trail positions. Never full sell at first trem. Okay. The only remember I said before the variables that we can manipulate in the market and our trading, we can control when we trem, right? We can't control how far the trade's going to go, right? If we hold runners, and even if it's just one contract, and that one contract winds up doing 200%, then it's going to increase your net P&L by a lot, right? And once your net P&L is increased by a lot, your R multiple will increase. So your risk is tight on stops, and your net P&L on winning trades is much higher, which is the goal for every trader out there, right? You always want your green trades to be bigger than your red trades if you can do that. Okay. Swings have high win rate, but can have larger drawdowns. So it's key to be in comfortable sizing, right? Swings can have larger drawdowns as we're experiencing right now with PayPal due to, unexpected announcements by the company or data, that we can't, that's out of our control, right? So that's why I trade lighter size on swings and larger size on day trades. Okay. Now let's jump. We talked about risk a bit. Let's talk about moving on from losses. All right. You can only control the process, not the outcome. Okay. A good process can still lead to a bad result due to external factors. That does not make the decision itself necessarily wrong. Okay. As long as you are using a system, you're trading the system, if you take losses, and it's especially if it's like an external factor that causes that loss, then it's okay, right? You can move on as long as you don't full port anything. That just never full port. If you full port, then that's when people blow accounts. Like you don't, if you full port, you're not gonna have money left over to make the loss back, right? You have to have money left over to make the loss back. Okay. But this is very key. You can only control the process, not the outcome. Acknowledge your fallibility as a human being, right? We are humans. At the end of the day, we're humans. The goal is to act consistently with your process, not to be perfect. No one's perfect. All we can do is try our best, try to be consistent as well as we can, use a process and continue doing the process consistently until eventually you make money, okay? But that doesn't mean you shouldn't admit and accept when you deviate from your process. Okay. So even the best traders out there, even us, right? We make a lot of money at the end of the year. The four of us, Aristotle, Rav, Brett, me, we make a lot of money at the end of the year, but we still sometimes deviate from our plan. We deviate from our process. Sometimes we're so confident in trades that we let our ego get in the way, or we just have so much conviction, and sometimes we oversize, whether that be intraday or on a swing. It happens to the best of us, right? It happens to the absolute best of us. The best traders sometimes deviate from their plans, they deviate from their process, and sometimes, take losses or take even bigger losses than we're comfortable with. And that does happen to all of us, okay? Journal what you could have done differently if the loss was caused by a misstep in your process. Okay. Now, I've mentioned this before. Not every loss is a lesson, and that's true. Okay. If you take a loss, and whether this be a day trade or a swing, if you take a loss and the loss was controlled, it was within your risk parameters, it was within the setup that you liked, and for whatever reason, let's say it was a false breakout, or for whatever reason you got in the trade and you lost 10% on the trade and you weren't oversized, then you don't have to journal that trade. You don't have to journal that as a mistake. That was simply part of the process. Okay. Now, when do you need to be journaling losses? You need to be journaling losses when if the loss was caused by a misstep in your process. So what does that mean? Maybe you oversized on a trade. Maybe you traded too much, right? Maybe you over traded. Maybe you revenge traded. Maybe you took a boredom trade. Maybe you traded during data, right? Maybe you traded right before the 10 a.m. data and you had too much size, okay? These are things that you should be journaling, Okay. If it's a normal loss and it's within your risk parameters and you have normal size and you took a normal 10%, 15% stop, whatever, don't journal. You don't have to journal that. I mean, you can, right? Like journal every trade, but you don't have to say this was a loss and I suck and I need to change my system, right? Because some people think that, oh, I took a loss, now I got to change my whole system. No, okay? If it's a system that works, which our system does, right? Break and retest, bounce and rejects, failures off of levels, supply failures, demand bounces, right? These systems work because we've back tested them and we've been trading them for over a decade. Okay. But again, like if I let's say I'm so convicted, that SPY was gonna rip today. Okay. Like if I was convinced, all right, SPY's gonna break 691 and it's gonna rip. Instead of just getting starters, I would have added, right? I would have added at 690, maybe I would have added at 689, right? And then I'm in a dead position and I oversized. Okay. If I did that today, if I just added into a dead position, then in my journal today, I would have said, wow, Mike, why did you do that? Right? This was a misstep in my process. Okay. So only journal the loss as a lesson if it was a misstep in your process. If you deviated from your system, then okay, write down in your journal, yeah, okay, this loss, what can I learn from this loss, right? What corrective measures can I take because of this loss? Okay. Again, if it was just a normal standard stop, you got stopped out, you had the right size, whatever, you don't have to say anything negative about the trade. You can just say, yep, I took a loss. Yep, normal. Okay. And move on. Right. You are going to make a lot of decisions in life. Sometimes those decisions will be right, sometimes they will be wrong. This is true since we were kids, right? We used to do really dumb shit when we were kids, all right? And sometimes those decisions were good decisions, right? Sometimes they were bad decisions. That's just part of life. If you are maintaining a consistent process, don't allow yourself to lose control when external factors cause losses. So external factors they suck, right? When we're in a trade and news comes out and it's on the wrong side, it sucks. It's annoying, okay? It's very, very annoying when we're on the wrong side of a trade and news comes out. It's annoying. It's annoying for all of us. Even, how long we've been trading, if external factors ever cause us to lose, it sucks for all of us, okay? But that's just part of the process, right? As long as you're not in crazy size, then you can continue, right? You can make it back. You can make back every loss you take as long as you didn't crazy over leverage or full port your account. Okay. All right. So these are a lot of key points and revisit this page as well. Now I'm going to show you guys a journal entry example. Now, before I show you this example, I want you to know I'm still in PayPal. Okay. I'm still in PayPal. I'm holding, but if it does turn out to be a loss, this is how I would journal it. Okay. Journal entry example. What went wrong? Right? I oversized on PayPal. I added one too many times due to my conviction. Because again, like my swing win rate last year was 94%. So sometimes I do get a lot of size when I have a lot of conviction. Okay. So what went wrong? I oversized on PayPal. I added one too many times due to my conviction. I focused more on the fundamental side and less on the technical side, right? I was looking less at the chart and more at the financials. When I've said since the beginning, it's key to look at both, right? So that's a mistake. That's deviating from the system, right? I trusted the financial data that was given to me at the time. So something my dad always used to say is, you make decisions in life, he would say, you are making the best decision with the data that you had at the time that you were given that data. That's the only thing that I can think of, right? So, and he used to say that and said, you're going to make mistakes, you're going to lose in trade. I learned a lot about the stock market from my dad. And he used to say that all the time. You're going to make mistakes, you're going to take losses. But if as long as you made the right decision with the data that you had at the time, then there is no wrong decision. Okay, because that's the data that I had at the time. That's the only thing I can say, right? So I was focused on the financial data. I was focused on the fact that this company was trading at 7 times forward earnings and was technically and really just fundamentally cheap, really cheap compared to forward projections, right? I put too much emphasis on what the CEO said during the Q3 earnings call. I trusted the CEO. I shouldn't have trusted the CEO, okay? And the technicals, for whatever reason, didn't line up as well as the fundamentals, right? We were approaching a big demand at 50, right? 50 was a huge level. But this random news came out about, changing CEOs and they raised guidance in 20 last quarter, but then they softened guidance this quarter. So that was kind of crazy. But the technicals didn't line up as well as the fundamentals. The fundamentals were painting a different picture than the technicals. All right. And here's actually the excerpt from the Q3 earnings call that I thought I would share with you guys today. President and CEO Alex Chris, right? This was from last quarter, all right? Not this quarter, from last quarter. So literally 3 months ago, all right? PayPal delivered another strong quarter, and we are raising guidance with broad-based profitable growth across branded experiences, PSP, and Venmo. We have returned the company to growth and are on pace for 6 to 7% transaction margin dollar and growth in 2025. We are also building for an agentic future, partnering with leaders such as Google, OpenAI, and Perplexity. This is a stronger company today than we were 2 years ago, with differentiated competitive advantages, clear strategic direction, and building execution momentum. We believe we are exceptionally well placed to win into the future. So you get what I was thinking, right? Like the stock is down a lot. It's down 80% from highs. The financials are solid. And then we have this jackass, the CEO, telling us, all of us shareholders, by the way, that this is exceptionally well placed to win into the future. Now, I don't know if he was just trying to pop the stock last quarter, so his buddies could get out, at 80 before it sold. But this guy clearly was misleading shareholders, right, last quarter, because it's crazy that so much changed over the course of just one quarter, right? Anyway, so I thought I would include that, right, so you guys could see. I put too much emphasis on what the CEO said during the Q3 earnings call. I trusted the financial data that was given to me at the time. All right, corrective measures moving forward, if this does turn out to be a loss, right? Ignore noise from CEO and the board. You can't trust these MFs, right? You can't trust them. Don't allow conviction to over leverage trades. Okay. Now, I personally didn't over leverage myself. I lost a lot, guys, on PayPal. I'm down like 30 racks on PayPal. Okay. That's fine for me, right? But I did a little bit over leverage, but I'm not like, I have plenty of money to keep trading. Okay. So don't allow that high conviction to over leverage trades. All right. Size down before earnings, regardless of conviction. Right. That's something corrective that I can do in the future. Okay. And then technicals outweigh fundamentals at the end of the day. The chart wasn't screaming for a bounce. Okay. But the fundamentals were. The financials were saying bounce. The CEO was saying bounce. I thought even Brett got in PayPal. We both got in PayPal, right? We both saw PayPal as an opportunity. Okay. Technicals outweigh fundamentals. Trade the chart, not the company. Okay. So if I wind up losing on PayPal, this is what's going in my journal, right? This is what's going in my journal if I lose, so that in the future I don't make the same mistake, because this was a little bit deviated from my system. Okay. All right. Let's move on. Stay focused on the future. All right. How can we move on from losses? We can do that by not allowing ourselves to dwell on the past. We have to focus on the next high probability setup and keep shooting shots. That's why you guys didn't see me like take a day off. Like I'm not crying about PayPal. There's no crying in the casino. That's what there's no crying in the casino. Jokes aside, it's serious, right? I can't just take a day off and start crying. I'm not gonna cry. No, I gotta make back the money, right? I gotta make back money. I'm already doing it. I'm already doing, I'm the SPY swing hit today, 20% on the SPY swing. Day trade, right? Like the Tesla was crazy, and I had a crazy day trade yesterday. Like I'm already making back the loss. Okay. So I'm forward focused. That's how you have to be as a trader. You have to be forward focused, and after you take a loss, focus on the next trades, right? As long as you don't if you full port and blow your account, you're screwed, right? You can't focus on the next high probability setup because you're toast, right? So focus on the next high probability setup and keep shooting shots, right? Drawdowns happen and they are okay, right? It's okay to take a drawdown. It's okay to take losses. Just understand that in your head, okay? Use day trades to make back any losses occurred swing trading, okay? Obviously, if you're not consistent day trading, that may not apply to you. But for those who are consistent day trading, it's going to really help cushion the blows when you take a loss swing trading. Okay. Set clear goals for yourself. They don't have to be financial goals, okay? A lot of people are too focused on the money. Focus on your mind, your mental, right? So set mental goals and psychological goals so you can control your losses, you can control your discipline, and that may be as easy as writing on a piece of paper before every trade. I'm going to be disciplined in this trade. I'm not going to risk more than 15% on this day trade, right? I'm going to respect my stop, right? I am going to trail my runners. I am not going to full sell at first trim. I am going to trail my runners. Okay. It's not always about financial goals, guys. It's not, oh, I need to make 20 grand this month. Yeah. Don't always look at the money because you have to focus on your execution, right? Your execution as a trader, your execution in trades, right? We have to get really good at that. We have to get really good at controlling our discipline, controlling our psyche, right? Once we control our mind and we can control our gains, right? We control our losses, we control our gains, okay? Reframe the past. Don't view the loss as a burden. View it as a growth opportunity. Okay? You're paying tuition. When you lose, you're paying tuition, right? Reframe the mindset of the loss. Don't view it as, oh my God, I took a loss. No, think about it as a growth opportunity and corrective measures that you can take on the next trade, on the next high probability setup, right? Practice meditation, okay? Breathe in, breathe out. I'm dead ass serious. Guided meditation helps a lot. It helps a lot, right? Practice that. Guided meditation. There's Spotify has a lot of different meditation apps, right? Or podcasts, whatever. YouTube also has some nice meditation. Do it. I'm serious. It'll help, okay? Gratitude and thankfulness, okay? Don't always think about what you lost in the past. Think about what you have in the present and stay clear-minded about your future goals. Write down a list. This is going to get a little bit therapeutical, okay? But seriously, write down a list of every morning of things that you are thankful for outside of trading. This is just general psychology, right? And just gratitude in general, okay? Think about things that you're thankful for outside of your family, outside of trading, right? Your family, your kids, I don't know, waking up every morning, seeing the sun, right? Touching the grass outside, going to the beach. I don't know. Like, think of things that you're thankful for outside of trading. The fact that we live in America, the fact that we have freedom and we have the ability to trade. The fact that you could get a job if you wanted to, or you have a degree, or whatever it may be, that you get to watch TV, spend time with your family. Right? These are all things that you have to be thankful for outside of trading. And if you're thankful for things outside of trading, then it's actually going to help you in your trading. Okay. Because it's not going to be like, oh God, I have to make millions. You're going to be happy just in life in general. And once you're happy in life in general, you're going to be happy in trading. Right. It's actually going to help your trading in the long term. Okay. Stay grounded. I highly recommend going to the gym and eating healthy. It really helps. All right. It's going to help your mental. It's going to help your physical. If your mind is strong, your body is strong, and you're going to be way more grounded that way. Okay. Remind yourself of future opportunity and growth, both as a person and as a trader, right? We want to be growing. Every time we take a loss, we're growing, right? It's not a burden. We're growing as people and we're growing as traders, okay? Look at the big picture when it comes to life and trading. Macro. Always think macro. Don't think about what happened today. Think about what's happened over the past quarter or the past year. Think about what's happened in your life and in trading, right? Big time frames, okay? If we focus on the bigger time frames, then the smaller losses, even if it's a big loss, right? But the smaller time frames won't matter as much, okay? Accept and move forward. At the end of the day, that's all we can do, both as humans and as traders. We have to just accept and move forward and grow, right? My final point, grow. That's really what we're doing here. That's what we're doing as traders. We're growing. Our psychology is developing. We're becoming stronger people, right? As you trade, as you dive into this career, you're going to become a better person and you're going to become a stronger person. Your emotions, you'll be able to deal with outside emotions even better after you. If you become, if you've been trading for 10 years, emotions outside of trading, you'll be able to control them so well, guys. You'll be able to control them so well, right? So that's pretty much what I had to talk about today. I know that this last slide was a little like, oh, I'm a therapist or whatever, but it's important, all right, guys? All right, so I appreciate you all for joining this class today, and I hope this helps, and I'll see you guys tomorrow. All right, thanks for joining, guys.